Good morning, everyone. Steve here from theturtlefollower.com, and this is the stock market outlook video for this week. So if this is the first time joining us, what we do during this video is we just take a look at all the major indices, futures contracts, the ES, the YM, NQs, and TF for the S&P, Dow, NASDAQ, and Russell, respectively. And we kind of just try and get an idea of where we think we may be headed the upcoming week. It really helps us to frame our expectations for our trades and ultimately kind of gives us a good sense of where the market's at. So last week we talked about needing this bounce off of this level here. We came into 2076. We said that that was really the area we needed to hold. Sure enough, come Monday, we had a push down through the lows and then ultimately a rebound for the remainder of the week. Okay, so we came down and ultimately tested this level here around 2056 instead, which had been support going way back until the beginning of April. All right, so this is the S&P futures. And as I said, now with that in play, as I discussed with members during the week, we now have the potential for an inverse head and shoulders where you could see these ovals. And what an inverse head and shoulders is just a technical pattern that eventually takes and puts a target, if we can get a breakout of this 2120 area, puts a target somewhere around the 2200 level. All right, but we're not even there yet. Okay, first thing we need to see is a breakout over 2120, but I like how the market reacted. We reclaimed this 50-day moving average. We're now trading above it in the upper end of this range. Resistance still here, 2125. I would say now support, we could probably adjust this a little bit and bring this down to this 2056 level where it's bounced so many times before. So at this point, you know, really not much to go on here. The best thing I can say is we're going sideways. All right, until we break either 2125 or 2057, these other levels here aren't even in play. You could see all the support levels that we do have below 2057. But I just continue to think that the way the market's reacting here, it's had every reason to sell off. You know, with the Greece news, with not the home sales haven't been great. But I just look at this pattern here on the weekly chart, and it looks like it's just getting set up for a next move higher. And when that comes, I don't know. But, it will start with a breakout over 2130. So until we're out of this larger rectangle here, again, on the weekly, 2030 to 2130, we just go sideways. All right. And that's really the best I can offer at this time. I would say this coming week we may push higher a little bit, but what we really want to see and what maybe would gear us towards getting a breakout is we want to see some acceptance up in this area. All right, we want to see us hold 2120 to 2100, maybe consolidate for a few weeks, and then ultimately break out. So that's really what I'm looking for. But for this week, I think it's more of the same. I think it's just going sideways until we get some more resolution to this range. The NASDAQ futures, okay, you could see that the NASDAQ futures did exactly what we anticipated. All right, they pulled back. You could see this was Friday. All right, so again, we were considering this to be the bounce point. All right, we were looking for the bounce to come right at 45.46. Again, pulled back to the 50-day moving average, held the 50-day, and then started moving higher. So for me now, what I'm looking at is maybe this is consolidating in this higher range. All right, if we squeeze this down a bit, and now maybe getting to the point where we can put a trend line, something like that, and see if we can now get a renewed breakout over 46.77. But NASDAQ is the strongest of the four at this point. All right, breaking out almost to back to new highs, but we're out of this range. So that kind of is one reason that I lead to believe that the S&P is going to follow suit and eventually break out. Now, as far as the Dow goes, all right, Dow is one of the weaker ones. All right, Dow On the other hand, absolutely the opposite of the NASDAQ is breaking down. Okay, so we had this breakdown here. We eventually closed below 1755, which we did back here. Ultimately, that last week's sell-off brought us back almost to new lows. We were able to close above the lows, but had this slight rally. But you can see now what's happening. 50-day moving average rolling over. All right, trend line trending downward. So I think the Dow is a little bit of an anchor. All right, so we have all these divergences among the indices. All right, one's looking good, one's looking bad, one in the middle. So this is one of the reasons that we're kind of just bouncing around here in this range. So for the Dow, I think ultimately the real level that we need to watch is going to be this 17,360. Okay, 17,360, and if we break that, then we could probably head to 17,000 pretty quickly on the futures. All right, because there's really no support in that range, and you can see here that on the weekly chart we're breaking below the 200-day moving average. All right, we're breaking this longer term trend line that's been in place. All right, so we're out of this channel now, we're trending downward, and again, even though we had this nice bounce, I think it takes us more into a resistance point where people of the pros are going to look to short it and take it to the downside. All right, and the last one, the TF, which is the Russell. All right, Russell, similar situation, testing the lows for the last 3 to 4 months at this 1200 level, and you could see putting in a series of lower highs and lower lows now. All right, as opposed to before where we were trending higher. Now lower low, lower high, lower low. All right, and now maybe we come up to this 1254 or maybe even the 50-day 1240, and then roll over again. So again, this one is telling us we're trending to the downside. On the other hand, we are still holding the 200-day moving average with the rally that we had this week. You could see we held that 200-day, we closed above it. All right, and now maybe this is going to give us a little bit of a bounce point back up to this 1275. Again, very, very difficult environment right now because there are so many divergences amongst everything, amongst the indices, amongst the breadth in the S&P. So, a lot of different things going on. From a technical perspective, you want to try and stay into the NASDAQ names. NASDAQ has been acting well. The S&P names, we've been going sideways, but you can find some trades there. The Dow and the Russell, they're not holding up as well, but I'm sure you can find some trades. So the whole reason we do this is really just so you can frame your expectations moving forward. We're going to clean the charts up next week, start fresh, because they're starting to get a little cluttered. But again, you can see my biggest thing right now is I like the way the S&P is trading. All right, but we need to see some acceptance up in this higher end of the range, and maybe even a breakout over. I don't know why the chart took so long there. A breakout over this 2125, which then confirms this inverse head and shoulders, and then gives us a target of like 2200. So that's how we're looking at this week. Again, I'm not looking for much. I'm just looking for some acceptance in this area, and maybe a bounce for the Dow and the Russell, and a continued bounce for the NASDAQ. So that's it for this weekend update. Any other questions, please leave them below. And members, head on over to your weekend update, and we'll have a new watch list and go over our positions for the upcoming week. Have a great rest of the weekend. Catch you later.